All right. Namaskar traders. Good evening. Thursday evening, 5th of Jan 2023. It's 19 minutes past 8 p.m. And we had a 37 points negative move from the Nifty near month futures. It could have been worse, but it did manage a bit of a bounce back to save some part of the day's losses. Number one, it has broken below yesterday's low. Number two, the short-term trend, which we are deriving from the 75-minute time frame. The intermediate trend, which we are using the daily charts to decide upon. Both these time frames have now moved into a downtrend. This is not a good news. And the weekly charts, which we're using for the evaluation of long-term trend, is still holding all right, and these are the crucial supports. Momentum is clearly losing strength. So are we heading for a retest of the previous lows? That's the obvious question that comes to anyone's mind. Considering the fact that both the 75-minute time frame as well as the daily time frame now has moved into a downtrend, the possibility of a further slide on the downside is likely. Yesterday, if you remember, I had drawn some Fibonacci projections figuring out targets of on the downside 18108, 18037, 36 kind of levels. And then now we have a cluster at around 17960. So what I have done here on this chart is I've drawn a Fibonacci retracement from this low to this high, number one. And then I have projected this leg down on the downside. And I've got this level, and this level. Well, 18100 is taken care of. 18K is also been just teased in today's trade just to bounce back. This is the Fibonacci retracement, which is around 17,960, 950 levels. And then I have the target of 17,833. So these two levels, one should definitely keep an eye on the downside. This is almost being tested. I think little below that 17,850 is what one can look for on the downside if this kind of a selling continues. Today's selling, however, was, I would say, skewed to a lot of extent towards the Bajaj Finance, the ICICI Bank kind of stocks, but it was counterbalanced pretty well by others as well. We'll talk about these in a while, but let's talk about levels first. So downside level, number one, if today's low is gone tomorrow, then I would suggest that the level to watch for would be 17,850 on the downside. On the upside, I need to bring your attention and to zoom into the 75-minute time frame. And I wanted to show that before the momentum sell-off took place in today's trade, it actually created very good support here. If I bring my cursor and take these lows into consideration, it's around 18,083, 18,082, 18,087. So 18,090, 18,100. That's the first level that you should keep in mind from a very short-term point of view tomorrow morning. And of course, I have maintained this red line that I had drawn few sessions back. So 18,200 and 18,100 are the levels that you should look for. 18,100, 18,200. As long as 18,200 is not taken out, expect a bit of selling to continue, selling pressure to continue. Now, Bank Nifty got hit pretty bad thanks to ICICI Bank. I think we discussed ICICI Bank in our yesterday's video. So if I remember correctly, we discussed that if Bank Nifty's low is broken, then 50% of this move will get retraced and all that stuff. So let's quickly check where does the 50% mark holds. So from this particular low to this particular high, if we bring in the 50% Fibonacci retracement, it comes around 42,678. So that's gone, right? So in just one day, or I would rather say in just two trading sessions, the Bank Nifty has given back 50% of its previous move up. So that's why no wonder they say that bulls take the stairs and the bears take the elevator. So trend on the 75-minute time frame has moved into a downtrend. Momentum on the intermediate daily time frame has slipped on the downside. Momentum is also losing on the higher time frames. Combination of this analysis, this kind of price behavior clearly implies more towards the downside. So you should keep an bias on the downside and look for shorting opportunities, preferably on a rise when the prices are bouncing back. Look for a shorting opportunity there. In terms of levels, it will be 43K on the upside, which should act as your immediate resistance. And on the downside, we have 42,400, little below that, 42,430, 42,400, and a nice cluster of Fibonacci retracements. Now, don't have much swings to actually use as a Fibonacci projection. I can try a little bit, but I'm not too sure how much it will make sense for the leg on the downside. And I have a cluster at around, so most of these levels have been met. The only level that we can look for is down here, which is 42,038. So yeah, 42,000 to 42,200 is where you can expect the next level on the downside. 43,000 on the upside. Bias stays negative. Don't be in a rush or hurry to buy into the market tomorrow. We did discuss ICICI Bank yesterday. Opened up big time on the downside once it took out yesterday's low. We discussed about this outside bar and a huge fall. Just in one day, ICICI Bank has broken below its lows that it made towards the late December. Going back to Bank Nifty, there you are. The late December low, 26th December low is here, and the Bank Nifty is up here, and one of the important stocks have already taken that low out. So not a good sign, and so I would suggest that do not be in a rush or in a hurry to buy into stocks. Now, sectorally, if I sort in terms of sectors, I can see that FMCG managed a bounce back. From the very beginning, stocks like Britannia and Dabur and Hindustan Unilever and ITC, all of them were there to support the market. FMCG, however, is in a downtrend. It's just giving you a bounce back. Good thing is, or what I would be looking for is, which are the sectors which did not break below yesterday's low? Because Nifty broke below its yesterday's low. Bank Nifty has broken below its yesterday's low and closed below its yesterday's low. So if there are any sectors which has not broken below yesterday's low, number one has shown some strength and can give us some buying opportunity if someone wants to buy. So FMCG is one of them. Oil and gas is one of them. Auto is one of them. And I think pharma is one of them. The top four over here, which are gainers, are all gainers, and they have not actually broken below yesterday's low. Good sign. Public sector enterprise is also one of them, though I think that if the CNX PAC index breaks below today's low, it will be gone. Another close to 2 to 3% correction we can see over there. Now, metals broke below yesterday's low and bounced back. If metals break below this low tomorrow, you will be gone for another leg on the downside. Same I think goes for real estate. Same goes for PSU Bank, media, IT, private banks, of course, thanks to ICICI Bank, and finance, thanks to Bajaj Finance. Now, private banks and finance have already given us a big move. So the possibility of finding an opportunity here will be relatively lesser. So let's quickly take a look at the stocks which I think can give us a move tomorrow. But before that, I will quickly show you that the FII numbers are again negative. And I think 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 trading sessions of all FII figures on a provisional cash market are all on the negative. So they've been selling in the market heavily. Global markets, before we go into the stocks, are not good. Your US markets is down 1%. This is the Dow Jones, which has clearly made a lower high and a lower low so far. It's been an opening high for the Dow Jones Industrial Average. Remember, we had analyzed this chart. We spoke about the downtrend. We spoke about the range-bound behavior. We discussed that it needs to either give us a breakout or a breakdown in either direction, it will pave the the way for the next directional move. And so far, as of now, whatever we look into our charts, it's looking like it's heading down. S&P 500 is 1% down and opening high over here. As we scroll down, I can see SGX is now teasing with the 18K mark, 18,000 mark again, down around 42 points. Not a big number on the downside here, but we'll see how this number plays out tomorrow morning when we begin our trading session. Now stocks, tricky. However, I would like to talk about two stocks. One, a heavyweight Nifty index stock, Larsen & Toubro, LMT. Now, one of my favorite investment stock, but this stock is in a very interesting juncture. I would say that it's in a situation where it can give a direction in either on the upside or on the downside. Well, if I break it down in terms of trend, it's in a downtrend. If I consider the momentum from an intermediate point of view and a long-term point of view, it's slowing down, which means that any kind of a slip below today's low somewhere here should open up further grounds on the downside for Larsen. So I would say 70% chances of a downside move only if today's low is compromised. On the other hand, it's picking up some strength and it's getting reflected in the 75-minute time frame, both in terms of the short-term trend and the underlying momentum, but it needs to take out this. What I can see in Larsen chart is our 2060 kind of levels being tested twice, but this is more of a freak trade. This is a futures chart of Larsen. So what I'm going to do is I'm going to go to the cash, the underlying chart, and see whether that supports show in the underlying charts or not. Almost there. It's around 2050, 2060. So 2050, 2060 stays as the immediate support. So if you bring your attention to today's bar, it looks like a bullish Rami pattern. So I have some evidences of bullishness pattern wise and short-term trend wise. However, I also have evidences of weakness in terms of the underlying momentum and the underlying trend. And that's why I think Larsen is in a position wherein it will be better if we use the low and high of the mother candle rather than today's bar. Just give it a little bit of room. So if you use yesterday's high and low, put an alert, a move above 2101 on the upside or a move below the low of 2058. These are the cash market levels, and I think will give us a directional movement, a short-term directional movement. Considering the weekly charts, considering the momentum of the weekly charts, as I said, 70% chances I feel it's going to open up on the downside. City Union Bank, CUB, stuck in a range, as you can clearly see. Trend-wise, it's in a structural downtrend. Momentum is picking up. It went through a very sharp sell-off and an equally sharp bounce back, post which it's just buying time. And this very sharp sell-off is clearly reflected in this weekly candle. Last week was an extremely sharp bounce back. So far so good. This week is consolidation. Most of the time, these kind of consolidations generally try to reflect a move in direction of the underlying trend. The underlying structural trend is on the downside. So ideally, this should open up on the downside. Prices can behave, prices can misbehave. So if you get any kind of move above this high, I wouldn't suggest you to buy, but this possibility of a fall will get negated. So City Union Bank and Larsen both can be looked upon as a shorting opportunity tomorrow or when they break those levels. Quality wise, of course, in terms of the quality of the stock, of course, Larsen is far more superior than City Union Bank. Let's see how the markets play out in tomorrow's session. With we will get the first weekly candle of the year 2023. As I wrap up tonight's discussion on the markets at 8:33 p.m., SGX is down just 29, around 30 points, just hovering above that 18K mark, and US market struggling, almost cut off 1% over there, right? I hope you had a decent day of trade today. Take care of yourselves, trade well and trade wise.